Hey everyone, this is Heather again, and this is going to be another tutorial on how to use live options flow, and this one is again for an intraday trade idea. So on April 28th, AMD moved down, opened at 88.85 and it closed at 84. So there was a $4 move in the day, and that was all bearish. So like the entire day was bearish. So let's see, and there was some high volume as well. So let's see if we could have found this setup using live options flow. All right, let's go to the live options flow. We have the AMD flow open for April 28th. You can see the date here, and you can go to the historical flow based on the calendar that you can see here. Now, right, again, there are differences in trying to find swing trade ideas and intraday trade ideas using live options flow. So if you just look at this and you see there are so many calls to puts, like 82% of the flow was calls, and the net premiums, the call premiums minus the put premiums, is actually positive. So both of these values are bullish. Then why did price go down? Let me explain. This is a really interesting one. So let's go to the start of the day. Again, when we are trying to find intraday trade ideas, it's always better to spend the first 15 to 30 minutes, maybe just the first 5 to 10 minutes, looking at the flow to see what are people expecting and where is the smart money being spent. So this is an interesting one, so please hold with me, because this might sound like a bit of a contradictory trade idea. So we start off the day, we have these buy calls, and we have these sweeps come to 300k, 300k again, 121, 116, 178k. So this is a lot of money being spent on buying calls. The stock price is at 88 and the strike price is 90. So someone is maybe expecting the price to reach 90 by September, then someone is expecting the price to reach 100 by 2022 January, then 87, 87, 87 by again December 2021. But one thing you can see here is that all of this flow is very long term. So this is not short term. This is like all about at least 2 or 3 months away. So we are in April at this point in time, and the flow is mostly for, let's say, September, January next year, December this year. So it's very long term flow. And if you're looking at intraday trade ideas, you don't really want or care about this long term flow. Why? Because even if the AMD price drops today, these contracts are not going to change in value by a lot, because these are very long-term contracts. So these people, they are not really going to sell. They're expecting the price to move up on a longer term basis. They do not care about the intraday price at all right now. So that's why they bought all these calls. Let's go to the call sells. So when you're selling a call, and if the price goes above the strike price, so if you're selling at stock 87 and the price goes above 91, then you'll have to sell your shares at 91. Although the stock price has gone above the strike price, at expiration you'll still have to sell your shares at 91, and no one wants to do that, because let's say the stock goes to 100, why would you want to sell your shares at 91? But if you're selling a call and you're collecting premiums, then you are obliged to do that. So now look at all these cells. So the first two cells, sure, the first is August, then we have a 2023. So maybe someone is not expecting the price to increase by 2023. Sure, it's a 100k bet, but it's a very long term contract. So let's just ignore that. Look at these 5 contracts. This is key here. When you look at these contracts, you can see that the strike price is 91 or 86. The expiration date is just 2 days away for these, and just about 7 to 8 days away for these. Now this is key here, and these purple symbols, let's see what do they mean. The purple symbols mean that the order was filled at below bid. The order was sold for a below bid price, and whenever an order is filled at above ask or below bid, that shows urgency, because someone was willing to sell this call contract even below the bid price. So they really wanted to be fast, and they really just wanted to get rid of the contract. That's why they were willing to sell it below bid. Similarly, if an order is filled above ask, that means that someone really wants to buy a contract and they're willing to pay a price higher than the ask price. So these are always strong signals, and this pink color actually shows you that. And now you can see that all of these contracts are expiring in 2 days. So if the stock price goes above 86 or 91 within, let's say, the next 5 to 10 days, these people are not going to be happy. And these are the only people, at least here, that are let's say selling contracts. The other ones are all long term. So just by looking at the first 4 minutes, you know that long term people are really bullish on AMD. Even I am really bullish on AMD, Nvidia, and other chip manufacturers. But short term, in the next 2, 3, or 5 days, someone is really bearish on AMD, and they are not expecting, not bearish, they're just not expecting the price to go up from, let's say, 88 or 87. They're just not expecting the price to cross 91, and someone is actually not expecting the price to go above 86, and in just the next 5 days. So this flow right here, just a few lines, was key here. Let's go up because we want to be sort of fair here. Now again, you can see that this, then again we have two orders here. Again, you might say that these are short term, but look at the strike price here. The strike price is below the stock price right now. So when the strike price is below the stock price, sometimes that doesn't provide us any directional information, because if this was 100, the strike price was 100, and the date was April 30th, then that might mean that the price has to increase significantly in order for these contracts to be profitable. So someone might be expecting that increase. But these are both in the money options, and in the money options can be used for hedging, can be used for all kinds of purposes. Sometimes, sure, they are used for directional predictions, but there is more stuff towards the bearish side here than we have for the bullish side. Then again, we see this 120. So you might say, oh, we have a call buy, a lot of money being spent, 500k. Look at the expiration date again. It's September, October. It's October 15th. So again, long term, maybe we are going to reach 120 by October. But the short term flow here is very bearish. Again, see, both of these are April 30th, but the strike is just 85. So we are not going above 85 strike for all the buy calls, but for the sell calls we are staying about at 90. That means that price will probably not go above 90 based on this flow from the first 11 minutes. In the next few days, let's say 5 to 10, and price, if you're seeing these 85, then you can also expect that the price might not go below 85, but that's not really a guarantee, although nothing is a guarantee. But the majority of the flow is telling us that there is more confidence that the price is not going to cross the 86 level, because we had 186 as well, and for sure it might not cross the 90 level. And that's what happened. We started with 88, and look at where we ended. We ended at 84. So again, this was an intricate alert and trade idea, and I wanted to go over it because a lot of people just look at the buys, the call buy, then the puts buys, and they don't look at the strikes, they don't look at the expirations. If you are an intraday trader using live options flow, you have to look at the shorter term expiration dates and out of the money strikes. A really cool tip here would be, if you want to do this, you can just click on complex, you can click on OTM, out of the money, you can click on short expiration, and you can see that we just found two of those contracts. I think if you do OTM, then if you remove the OTM, then you're also going to see some of the other contracts. So this is a really good way. Again, you can see that all of these are call buys, these are complex short-term expiration, but these are both in the money, and then we have some out of the money. So there is again more expectation towards the bearish side here, even based on these two filters, than the bullish side. And that's how you could have known that AMD might go down, at least today, but it actually went down the next 2 days as well. So we started from 88, it's now sitting at about 81. So that's a $7 decrease in 3 days, and you could have seen this from live options flow. Although this was a difficult flow to follow, it was still there. You can see it when you go back and analyze the flow. So that's what I just wanted to highlight in this video. We are going to obviously discuss a lot more trade ideas using live options flow. So I'll see you guys in the next video. Thank you so much for watching this.